Good morning, traders. It's 8:01 a.m. Chicago time on Tuesday, the 5th of January, 2016. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Quick rundown of the overnight news. Not much to talk about, but it was interesting to note since 2012, Smith & Wesson's stock is up 733%. Uh, Blowing away the most bullish projections out there. Smith & Wesson is a weapons manufacturer, a gun manufacturer here in the U.S. Interesting movement in that stock. China dropped another 3% on their session before rallying to a gain of 1%, basically a 4% swing up. It closed up 0.3% on rumors of government intervention forthcoming. Eurozone CPI came in at 0.2 year on year, which is below the 0.3 estimated. Euro saw selling pressure as a result. And the dilemma between Iran and Saudi Arabia expands as Kuwait, Bahrain, and Sudan also cut diplomatic ties with Iran. Crude oil rose slightly, but is still under selling pressure. Those are the key items I have for you. We did get Red Book sales, but it's not a significant figure. As far as what we're looking for today, the only thing that we have left on deck is at 8:45. We have 8:45 Central, 9:45 Eastern. We have U.S. ISM New York. The December number, there's no estimate, but other than that, the deck is clear. There is an auction at 11:30 Eastern, 10:30 Central um, for 4-week bills and 12-month bills for those who are trading the yield curve. I didn't cover the weekly yesterday, just so we have an idea of what's forthcoming. Wednesday, Germany, Eurozone, and UK release their services PMI. Eurozone PPI, US gets its ADP, trade balance, PMI, durable goods, factory orders, and ISM all tomorrow. We also get the Fed's minutes. On Thursday, we get German factory orders, construction PMI, and then Eurozone retail sales and employment, consumer confidence. And then also on Thursday, we get U.S. jobless claims, Fedlacker and Evans. And then Friday is the big day. UK visible trade balance, and then we get US payrolls, non-farm payrolls, unemployment. We also get wholesale inventory and consumer credit. We have Feds Williams and Lacker also speaking on Friday. So a lot of releases over the next 3 days. Something to look out for. Let's switch gears here to the charts. All right. If I can find the window, it's tucked away. Here we go. So yesterday I left you with a primary hypothesis for a potential attempt at responsive buying up to this 2013 area. But I did discuss that the probabilities for that, given the size of the gap, which was about 36, 37 points, were pretty minimal. That we would make it anywhere close to the prior day's auction low, which was 30.25. And so the expectation yesterday was for it to try a little bit higher and then most likely push down into 80.25 and 74.50 at the levels mentioned. What ended up happening, let's expand this a little bit. What ended up happening is that we ended up not having much of a responsive buying push. We didn't attempt at all to push up into the auction. In fact, yesterday we had a very, very clear open auction out of range, meaning no participants, no key participants in the auction early on. So if I pull back here and show you, you'll see that it just traded sideways right here. So we open and there's just no participation really right at the open, and then we finally pushed lower. Pretty much everything indicated lower. Transports were pushing lower pretty hard, and also the 5 key underlying sectors were trending lower on the open. Pull back to the mid. That failed a little bit. It pushed through by a bit, still within the stop limit, and then it finally relieved and pushed lower. Ultimately, the market ended up testing the first of the 2 key levels below, which was this uh, naked point of control. It pushed to it right to the tick, 80 quarter right there. I did expect it to push down into 74.50. The key thing to note is we did take out the low of this balance zone at 83 and a quarter. As soon as we did, we pushed it by 3 points. As soon as we did, we had a pretty good rotation up, a higher low. Tricky trade later in the afternoon. We had a very bullish. So what we formed here is a sort of funny looking cup and handle right here. And I called out in the chat room, in the S5 chat room, that we had a bullish pattern forming right over here. So we have this push, we test lower, and then we form this kind of cup, and then we start to form the handle with a pivot around this 99.75 area, and that's what I looked for, a bullish push here, and it just failed. It formed another one later in the session, and that one failed too before it actually held up. So here's a bigger view of the formation right here, right? And it pulls back like we would expect. It pulled back to this congestion area down here, um, and then pushed back up, and then it failed slightly again. So there it is, failing again. So this is the big one that I was looking for, right here. Pull back, just as we would expect, to the next congestion area, midpoint, and then push through. And the expectation is for it to go neutral and push higher, and instead it ended up pushing lower, and then just out of nowhere, boom, on the close. In the last hour, we got the higher time frame participating and pushing this quite a bit, all the way up to 2009 and a half on the close. Big run yesterday. Strong delta. So let's look at that again. Again, this is all history, but you could see that the volume on that last 15-minute cash bar, which was from 2:45 to 3 Central, was really high, and in fact, it was higher than the opening bar, which we don't see very often. We saw that the last day of the year here, but we don't see that very often. The volume, the average volume represented, or the 20-day median volume represented by the yellow bars, influenced by this low volume that we had at the end of last year. But the overall volume that traded here was very high, and the delta showed a decent push up, with price movement also confirming that. So bulls were out, and my comment was look out for continuation through the overnight session. The target for the continuation is again 2013 and a quarter. It ended up pushing to 2017. As soon as it pushed to 2017, I was looking at my S5 bookmap chart. As soon as it pushed to 2017, it was unable to take out the liquidity up there, and it ended up selling off. So I'll show you a quick view of that. Here it is. The market pushes up to 2017. Lots of liquidity, or relative liquidity for the overnight session there. It attempts again, and then from there it drops all the way down to 1995, which again sees a lot of liquidity down there on the bid side. And we saw 1995 play out quite a bit yesterday. So you can see the market here is bid. The white here represents large bids, and then the circles are actual trades against the bid. Um, and it pushes through, and then after that, it starts to, we still get more volume here at the 1995. 1995 traded quite a bit in the overnight session. So it's interesting. It seems like the OTF is participating on both sides, and we're looking for that to continue into the session. That's the point, a very long roundabout point that I'm making. Anyway, we're in the gap in the overnight session. The gap is from 2030 and a quarter to 2009.50. The gap zone formed yesterday. The market's likely to take that gap out. The overnight low is right up against the point of control from yesterday. We do have a balanced market yesterday until the close. We had a very balanced market. You can see the profile is very Gaussian in shape, and then we pushed up. The market put in a weak high, lots of volume on the high, and closed on the high. So again, the expectation was for it to continue higher in the overnight session, and it did. We're looking for a test of that weak high on the open. The expectation for the open today is very simple, very classic. The expectation is for it to for us to look for responsive selling on the open, and then to attempt to take out this 2009.50 and start moving towards 2017 as a test. If it fails to do so, the areas of support below for this rotation up, there's plenty here. We have yesterday's IB high. We have the value high, which is valid here. The value high is shown it by this gray line here at 97.50. Those are areas I expect the market to find support and start to rotate up. Whether it opens, takes out that high from yesterday and moves lower, which likely targets the point of control below, and will likely fail to take out the 2017, or whether it pushes lower, bounces up. As it pushes lower, if it pushes lower and starts bouncing up, then I'm looking for it to have pushed low enough to gather steam to push to 2017 and take the overnight high out. The midpoint of the gap is approximately 2019 from yesterday. So we have almost the traditional auction behavior is for responsive selling towards value, to base at value or around value, and then push higher. Yesterday's close was neutral extreme high, and we finished fairly strong. So I expect the continuation to be in that direction. Again, we tested below the long-term balance from October 23rd, and we found our buyers. So in my opinion, it is more likely that buyers will continue to intervene and push higher than sellers to take it back and push it through the low, unless there's more news. So that's the nature. Again, I would warn shorts to either take on a hedge of some sort, an option, or to lighten up their position. I expect this to continue higher, and for the auction to resume back up into the 2030 handle. That's what I have for you. I did promise to do a long-term view of yesterday, a long-term view of 2015, but I don't have time for that today. There's a fair amount to cover, and it's not ready yet. One last thing I want to share with you. This is a percent line chart of the SPX, the S&P index. Oh, I didn't switch this to the SPX. I apologize. The SPX. So This shows ES, but it should say SPX, and against the China ETF. And this is basically from the 1st of January 2014, and you could see the performance on a percent basis of the ETF versus the S&P, and it gives you an idea of the magnitude of the what China's going through right now. Again, these are in percent terms. The Chinese ETF, which it's a Deutsche Bank ETF, um, which closely approximates the Shanghai Composite. You could see after a huge run up, it's actually lower than the S&P currently, and we're responding to it as we turn lower with the China ETF. This just gives you an idea of how much of a difference we've had in our economies and how badly this has fallen off. Not to mention that those who are pattern based can see the head and shoulder formation that has taken place here, and projecting it down looks really ugly if you took the pattern and projected it lower like we normally do. Anyway, just wanted to leave you with that thought. I haven't fully developed that idea. It's one of the charts that I'm going to cover on the long-term view. Hopefully this was useful to you. I will catch you tomorrow morning. Good luck. Take care. Watch your risk.